On the 13th of August 2025, Stransact, a Nigerian-based accountancy and advisory firm, hosted a one-day seminar workshop for corporate taxpayers and business owners in collaboration with the Nigerian Revenue Service in Lagos. The event themed Navigating Nigeria's New Tax Landscape, Understanding the 2025 Tax Reform Act, and Mandatory E-Invoicing for Taxpayers brought stakeholders across different tax sectors who shared their insights on the prospects of a new tax law.
Number one is the fact that it is pro-business. That is, it encourages ease of doing business. It it's going to encourage compliance by businesses, and it's going to improve their compliance level. Then the fact that we now have laws that are few in number and harmonized in just 2 documents, because if you are looking at the one that actually affect the taxpayers, we have the Nigerian Tax Act that imposes taxation, that imposes taxes, and we have the Nigerian Tax Administration Act that deals with how do we comply with those tax laws, the administration. So those are the 2 major laws that will affect the taxpayers. And what this means is that the laws are easier for taxpayers to comply with, because before they have to check through or look through so many tax laws, but now we have just 2 to look through when they are doing their businesses. And also the fact that we have laws now that are very simple. Gone are the days of those complex tax laws, complexity in terms of rules and in terms of wordings, the text. Now we have laws that are simple in text and in wordings, and simple also in rules. So which make it easier, going to make it far easier for taxpayers to comply with. And one of the things when we are talking of the fact that there is ease of compliance is the fact that it also reduces the cost of compliance for them. For me, it's a win-win situation. But if you are looking for the losers will be tax evaders. Yes, those that have been running away from paying taxes, because now the law encourages the deployment of technology. And if you remember that one of the things that was discussed today is the issue of e-invoicing. The fact that now, as you are making your purchases or somebody making his sales, the invoices are generated and reported immediately with the tax authority. So what that means is that nobody can hide any longer. Tax evaders will not find it easy under the new dispensation.
Iben Joel, managing partner at Stransact, in his welcome address, speaks on the importance of the training for the growth of the Nigerian tax sector, urging participants to leverage the opportunity to learn and network with key stakeholders across the sector.
There are many benefits. There could be some hurdles before we get to realizing the benefits. Some of those hurdles we talked about, such as the cost of integrating systems. For most small businesses, they don't even have the funds to invest in, say, ERPs in the first place, But overall, the biggest business benefits that I see from it is that when invoicing is standardized in that manner, there are certain sectors that could open up. One of them is invoice factoring, which right now is very nascent, if you know what I mean. So invoice factoring is an institution where once I've issued an invoice to somebody, if the person has not paid, I can take that invoice to the bank and ask the bank to advance me money against that invoice. So right now, because of a lack of that kind of platform where invoices can be easily verified, a lot of banks don't offer invoice discounting.
The first session of the workshop, hosted by Victor A.T., tax partner at Stransact, touched on key changes and implications of the 2025 Tax Reform Act, bringing detailed clarity on areas impacted by the reform. The session gave key insights on the taxation of resident and non-resident persons, taxation of individuals, and employment income, determination of chargeable gains, taxation of petroleum operations, and indirect taxes, bringing clarity on taxable transactions.
There are some amendments that are there to encourage even investors to come in. We have the no association gas order that will allow them to have credits for their greenfield, and they are depending on the number of oil that are there. But the essence is actually to make people, to make them to develop to come and invest. It's only the gas. We have so much gas in Nigeria that they have not really do anything about it. And with those orders, it will encourage them to invest so that we can, in Nigeria as a country, can get value for those yes, gas. It's a welcoming idea. Like before they do provisions, and provisions as far as law is taxation is concerned is not allowable. You just think like, I want to make provision for it, but for you now to be able to deduct it and be allowed for tax purpose, so they are saying fund it. If you think 100 million every year, every $100 million or whatever, in most cases the oil company they do dollar. So it's going to, and because at the end of your leaving the production place and you want to leave that, you're supposed to restore the place back to its normal state. And so we are making provision that by the time I want to leave, that I've done, I want to restore the place. You are making provision to get money to be able to do it. Because towards that end, the feed will not be producing as such. And so to wait till that end will be very difficult. And that is the essence of, okay, make provision for it. And for you to enjoy it as a tax benefit, then fund it. So they're now funding, before it was like put it in escrow account, which may mean putting it overseas. And giving we don't even, we are developing, we don't even have money. So the little one we have depositing in a foreign country, we make those ones to be better than us again. They will have enough money to be using over there. But putting it, they are only asking for 30%. And I think it's CBN they want to use. So if there is a fear of if the bank may collapse, it's like they want to use CBN. So put 30% in Nigeria, that is cash that they can lend out and be able to do some other developments. So it's a good one.
The event also featured 2 panel sessions. The first panel focused on solutions and ways to navigate challenges and future outlook of the country's tax system, while the second panel centered on practical aspects of e-invoicing, including integration, data requirements, and transaction models. Stakeholders also collaborate the impact of the new tax reforms and how it will attract investment for the country. Simply, the tax system and boost compliance.
There's no loser. Everybody is a gainer. It's more of a win-win situation, and government is giving a lot in terms of incentive to encourage business and even individuals in the country. Now, the principle is that we are not going to tax the seed, we are taxing the profits. So, and we are not taxing the poor, we are taxing the rich. Because it's simplified, the tax system, and also the issue of fiscalization is there now, that issue of e-invoicing, which is going to bring many taxpayers into the tax net, and which eventually will increase the revenue of government. You know what we're having presently, the data before now is that our tax to GDP ratio is very low. Until recently, that has been increased to about 11 or 13%. But we can still do more, because in the West African, something say expect to be 15% is the minimum tax to GDP ratio. Nigeria is moving to that level with this tax reform and fiscal policies.